We're not going to waste any time getting to this week's top stock picks. Shiraz, you have a hotel.
Wyndham Worldwide. So you kind of a hotel, but it's in the broader hospitality space. The hotel or lodging part of the business is relatively small, accounting for about 25-30% of total earnings. The big business is timeshare, and they are the biggest player in that space. And then they have these vacation rentals business, which accounts for the rest of the earnings. The vacation rentals and the lodging, these are entirely fee-based businesses. They don't own any of their hotels. They don't operate any of their hotels. These are entirely franchise properties where they just get the fees. The vacation rental is a fee-for-service business as well. And a growing part of their timeshare business is moving towards the fee-for-service too. This is a cash flow story. I remember picking the stock for the top 10 for 2012, and primarily for its strong cash flow strength. It was a top performer in the portfolio that year. But did even better in 2013. And my sense is that the thesis for which I picked it in 2012 still remains valid, and I see a strong momentum from this stock, even though my overall outlook for the market is kind of on the bearish side. They should be generating $750 to $800 million in free cash flows this year, and that should continue into the next 2-3 years. And they have a very shareholder-friendly payout policy for that. They pay it out in dividends and buybacks. In fact, when you look at the entire lodging space, their free cash flow yield is close to 9 to 10%. So a very strong story on modest revenue gains expectations for 2014, and that's the primary reason for I have this stock as my top pick today, and it's a Zacks ranked #1 stock. So overall an amazing story.
You don't have to convince them. They're not investing.
I'm convinced. I love it. Yeah, no, good space right now.
That's right.
The industry rank for that group has also gone way up.
That's right.
Brian, you're in technology, sort of?
Yes, Ubiquiti Networks. They sent me a check for $500 because I've recommended them so many times here.
Geez, I wouldn't go on the record with
Ubiquiti,
that.
Ubiquiti. I want my 500.
I'm just teasing. They didn't send me a check.
Email Brian directly, folks.
Right. You can all share a little piece of it.
I'm good.
Yeah, the idea is this is a wireless internet service provider, and they're servicing the international markets.
Yeah.
Very, very little here in the States, but the idea is that the internet is needed, especially in rural areas that don't have the big infrastructure build out in internationally. So the wireless portion of this sort of idea is what's really going to help. Their growth in revenue and earnings has been tremendous. It's a consistent beat and raise type stock. It's done very well over the last several months. We expect it to continue to do very well over the course of 2014.
All right, and Kevin, you have a financial stock.
Yeah, it's American Express, ticker AXP. Most people are familiar with American Express through their charge card, but they're far more than just a charge card company. They're a global financial services firm. The reason why I liked it, you had touched on it just a moment ago. They're in the financial sector. The financial sector is literally one of the top Zacks ranked sectors out there. In fact, I believe it's the second best Zacks ranked sector. Also, too, though, if you take a look at AXP themselves, they're a Zacks ranked #2. That is a buy. And what's interesting is that over the last month, I had been coming down here and I had been talking about how the large cap stocks had been outperforming the small cap stocks in the month of November, and they had beat it by a factor of 2 to 1, and I had believed that we were going to continue to see that trend this month as well as for the first part of next year. So you'd be hard-pressed to be able to find a large cap stock as good as American Express. And I see Brian shaking his head. Large caps in November actually outperform small caps by a factor of 2 to 1, over 3% to less than 1.5%. Pretty fantastic. The reason why I like American Express, though, is if you were to take a look at their numbers, they look great. Sales are at all-time record highs. Earnings are at all-time record highs. Margins are beating their industry, and they just look fantastic. Now, take a look at their price performance this year. They're up 52%, so they totally crushed the market. And I think they're going to do the same thing next year. So over the very short term, I see American Express hitting $100. That is a 12% gain. Nothing huge, but 12% is still 12%, and I think there is a relative degree of safety with that big cap name. But overall, long term, I'm expecting American Express to get to 120. If it gets to 120 next year, you're talking about over a 30% return. And the reason why that is significant, it will literally be more than twice as much as what I am expecting the broader market to do. And compared to these guys, it is actually going to make money as opposed to the market possibly ending in negative territory. They also pay a 1% dividend. I think this is one of my favorite picks for 2014.
I like that too.
Yeah.
It's a good stock.
All right, thank you all for that. More stock picks on our website, Zacks.com. If you're not there already, get on over and check them out. In the meantime, we want to take this opportunity to wish you the best of the holiday season, whatever it is you're celebrating, and we will be here hopefully with one more roundtable and one more stock pick session for the year next week. With everyone here, I'm Terry Ruffalo.